Thank you, Mr. Chairman. As we consider the reform of mortgage finance, we have to think about the role that the federal home loan banks will play. The FHLBs increase liquidity in the system. They're often used by the small financial institutions, as you've pointed out, those who have limited access to capital markets. And while the FHLBs don't require taxpayer dollars, as you rightly point out, and they don't have an explicit government guarantee, they have a line of credit with the U.S. Treasury and are widely considered to have an implicit guarantee. So last month, I wrote to FHFA Director DeMarco asking about a multi-billion-dollar line of credit with Sallie Mae, a Fortune 500 company and the biggest private student lender in the country. And this line of credit they have with the FHLB. And right now, Fannie Mae is paying the FHLB 0.25% interest and then turning around and making student loans at a rate of 25 times or more higher. Now, I understand that many people understand that the FHLB's implicit guarantee and the extraordinarily cheap access to capital that results help support mortgages and help support community projects, but I don't think many people know that it's helping support the country's biggest private student loan outfit, Sallie Mae. So my question is, Mr. Jetter, do you have any thoughts on why the FHLBs are in the business of providing loans to Sallie Mae instead of focusing on local institutions that need access to that capital?
Senator, I understood you might be asking a question on this, and so I have taken a look at it a little. Clearly, the institution you reference is not a member of my bank, and so I don't have any independent or personal knowledge of their activities. I do know that we do accept government-guaranteed student loans as collateral. That in the past, during the financial crisis, there was severe issues in terms of liquidity in that market, and Congress encouraged the banks. I think there was a House bill that went through the sense of the Senate or the Congress bill, as well as a number of senators that encouraged the home loan banks to look very hard at accepting guaranteed student loans as collateral in order to provide more liquidity to the system. And then our regulator worked with us to encourage us to accept government-guaranteed student loans as collateral. And in terms of our collateral practices, we have members both large and small. We have insurance companies, credit unions, banks, and thrifts. We adopt collateral rules in terms of what will apply to the lending that goes on there. Really across the board. We don't...
Mr. General, let me just stop you there to make sure that I'm understanding this. I actually looked at your website, and the website for the FHLB says, and I'll quote, "The purpose of the federal home loan banks is to be a strong and reliable source of funds for local lenders to finance housing, jobs, and economic growth." Now, Sallie Mae is a Fortune 500 company worth billions of dollars. It is not a local business. It's not in the business of doing real estate loans, helping people buy homes. It's not in a local community. And so I'm trying to understand how it is that Sallie Mae has been able to access capital from the Federal Home Loan Bank boards at 0.25%.
Well, as I explained, that we have our membership rules are defined by Congress as who's eligible to become a member of the system. And we make our advances available based on collateral rules that are the same for all the members. So we don't distinguish to pick a particular member and say, we don't believe that that's acceptable for you because of the institution you are, but we would think it's acceptable for another institution. We actually have a mandate to treat all our members fairly and equally without prejudice.
So actually, let me ask you about that on treating everybody fairly and equally. Are the community banks and credit unions borrowing for 1/4%?
It depends on what they may be borrowing for substantially less, depending on what it has to do with the term and type of advance that they're looking at. But short-term rates are, if that's what you're looking at, are much less than that for most of our members. So I'm not sure. As I said, I'm not familiar with the type of credit that institution has, so I can't. But I would assume, generally speaking, for our bank, that those rates would be available to all our members, or be very comparable.
Well, but maybe I should ask this the other way. Mr. Hampel, I thought your testimony was very interesting about the Federal Home Loan Banks and the importance they play in providing capital to small institutions. So let me ask it the other way. Is there anything you think we should do or think about going forward to make sure that the Federal Home Loan Banks really are focused on lending to community institutions?
Well, I'm unfamiliar with any changes in the charter of the home loan banks during the crisis. You know, if Congress made changes in whom the Federal Home Loan Banks were supposed to serve during the financial crisis, I suspect the Federal Home Loan Banks would have to meet those needs. What credit unions use the Federal Home Bank for is not such short-term borrowing, because we have plenty of short-term funds from our members. We use it to hedge long-term interest rate risk. So we will borrow longer term. We'd love to pay 1/4%, but of course we're borrowing for longer term. We borrow for much longer term in order to use those funds to make put long-term loans on our books. And there are limits to the extent we can do that because of capital requirements that credit unions face.
I understand. And Mr. Hartings, would you like to add anything?
You know, I think the Federal Home Loan Bank of Cincinnati, who we deal with, does an excellent job with our MPP program. We really don't use a lot of the borrowing from that, so I'm not really probably here to tell you rates to help you out with that, Senator.
Okay, fair enough. I just think that as we think about mortgage finance reform and the role of the Federal Home Loan Banks, that I'm very impressed by what you say on your website, but we really want to think about whether or not the Federal Home Loan Banks and the implicit government guarantee that backs that up and permits it to have money at such a low rate is focused on our community banks and credit unions and on helping people buy homes and not in other areas. So thank you, Mr. Jetter.